Saqr said yesterday during the launch event for the Future Blockchain Summit. He said that the 3 core elements for the ecosystem are infrastructure, capital, and talent. So I'm pretty sure we'll see and listen to conversations about all 3 core elements of the ecosystem. I'm happy to invite on the stage Saqr and all the wonderful participants of this roundtable. Firas, you are like the leading. I'm going out of the stage because I think that it will be now full of. I don't know. Where is the rest of the gang? Saqr.
All right, guys. Can you hear me? Good. I think we're all set. Please, come on.
So you can't start talking on the stage without first getting a token of appreciation from the TDeFi team. And these are the pins, TDeFi pins, that are given to the roundtable participants as a token of appreciation. And now I think I should jump off the stage because it's overwhelmed. You need my mic, I guess.
Hi, guys. I've got mine. I always carry mine. Guys, we need one more mic. One more mic. Can you hear me?
Can you hear me? Yeah? Okay, good. All right. Welcome. Originally, Emmy was supposed to do this facilitation. I'm going to help drive some of the conversations today. And the discussion is around institutionalization of what we do, whatever we do, because I'm going to find out what everybody does, right? So the more important thing is to understand that any kind of scalability that we look at is going to depend on not just individual users taking and adopting various solutions, but how do the companies that are, many of them startups, grow up and become a part of the overall institutional fabric. And when they become the overall institutional fabric, they will amongst each other. Some may survive, some may not. But that's the part of innovation and growth people go through as they are building their companies. So today the discussion is going to be discussion number 1 with a panel of experts. Tomorrow there'll be discussion number 2 and day after number 3. And collectively we'll put together everything and write a white paper about it. We'll share with the community what does it take and what are the ingredients to make institutionalization actually happen. What will it take for large banks and large regulators and large retailers and large industrialists to absorb what these guys do and to take their solutions and make them into reality. So since I don't know anyone, the best way to do would be I'll start on this side with you, Massimo, and we'll go in this way all the way to the end. And then I'll give a tiny brief about myself. So let's start with you.
Hi, I'm Dimitrios. I'm responsible for Amber Group's business in the Middle East region. Amber Group is a digital asset gateway where you can buy, sell. We have a B2B offering, a B2C offering, and engagement on on-chain activities, being a designated market maker for protocol tokens. So across everything crypto, Amber Group is your place to engage. So thank you.
My name is Eli Taranto. I'm CBDO of Ereiqat. We are a crypto-friendly bank serving 180 countries, and we're one of the first banks in the world with an in-house OTC desk.
Hello, my name is Dominic Meyer. I'm the CEO and founder of iBlocks. We are a crypto and Web3 market maker, incubator, advisory firm, mainly focused on the trading side of it.
Hi, good afternoon. My name is Philippe Clonan. I'm a sales director for Fireblocks. We are one of the global leading providers in cybersecurity and infrastructure for institutions to help them build, scale their digital asset operations.
Hi, good afternoon. My name is Aurélie Delem. I'm Senior Director at Ripple, based in Dubai. So what is Ripple? Ripple is a crypto solution company that transforms how the world moves value with a big focus on institutions. So this topic is very close to our heart. We're definitely leveraging the power of blockchain and crypto to enable financial institutions.
Hello, my name is Alan and I'm the head European sales at GSR. What's GSR? GSR is probably the oldest and one of the biggest market maker out there. We are engaged in everything related to liquidity, trading, making market on the spot side as well as on the derivative side. And we also can consider ourselves as an infrastructure provider because we see liquidity in the crypto space as part of the infrastructure compared to normal financial markets.
Hello, my name is Marcello. I'm the founder and CEO of Singularity DAO. We come from the Singularity Net ecosystem, and with Singularity DAO, we are building decentralized, on-chain, non-custodial wealth management solution with different level of products, all on-chain and non-custodial, powered by data-backed strategies. And I think we are one of the few representatives of DeFi here, together with here. So it will be good to bring our point of view to this discussion.
Yes, hello everyone. My name is Gregory, and I'm one of the co-founders of GrizzlyFi. And our goal is, as you can see on my T-shirt, is DeFi for everyone. That means we are creating an ecosystem, and we are combining all DeFi areas in one and make it more accessible, more easy to use, and also more fun.
Hello, my name is Laurent. I'm the general manager for Comenu Middle East.
Closer.
So what is Comenu? Basically, we are an institutional custodian. You cannot? It's okay there? Okay. Yeah. I'll start from the beginning then, sorry. So I'm Laurent. I'm the general manager for Comenu Middle East. We are an institutional custodian. If you don't know what a custodian is the easiest way to describe it is to go back to Comenu name. Comenu is a Japanese name. It means a lion dog. If you ever been in Japan, you might have seen like those dogs at the entrance of temple and houses. They are basically there to protect you from evil spirits and harmful people. And this is what our job is, like basically making your assets, crypto assets, secure. Thank you.
Hi everyone, thank you for having me here, Crypto Oasis and TDeFi. My name is Filippo Buzzi. I am the MENA Regional Director for Hex Trust. Hex Trust is a leading institutional grade, fully licensed and insured digital asset custodian. I'll leave the word to our...
So I'm all good to go. Look, thank you very much. So I see a theme building here, right? The theme is around custody, the theme is around trading, it's around market making, it's around liquidity provision, right? That's the theme that's building here. The question to all of you is that, and maybe perhaps we need to start with you at Amber Group. You're doing something different, right? You're not doing custody per se, but you're building institutional tools, and you're not a B2C company, right? You're more of a B2B company. Can you kind of unpack the value chain a little bit and give us a little bit more detail on what you do and share with us where do you fit in that ecosystem?
Yeah, so we are trying to be involved at every part of the value chain. So we have our own custody solution, but we work very closely with Fireblocks and BitGo, for example. On the trading side, we create our own liquidity because we're a market maker the same way GSR is, and we engage with protocol tokens, but also we stream prices to our clients. But in addition, everything one would see on our app that one can download and everyone can engage, and you can check it out if you go under Whalefin on the App Store. So we have like our own B2C offering called Whalefin that you may have seen also on the Atletico Madrid shirt or the Chelsea shirt. In that case, we are engaging, we are the ones providing liquidity to our own clients, so as a single dealer platform, as an aggregator. So the analogy in the traditional markets, you could call it, we're a systematic internalizer under MiFID II. Effectively, we source liquidity, but we risk manage and we provide our own two-way markets to the end client. We try to be part of every part of the value chain, both on-chain and off-chain. So obviously, it's a centralized platform, and we provide, for example, staking services to access the opportunity to earn yield in crypto markets. And nevertheless, we're very active on-chain as a market maker with various trading protocols, as a market maker for protocol tokens, as running nodes across 30 blockchains, and as an investor in interesting strategic projects. So the institutional aspect comes in every single one of these boxes while working with other participants to engage, in some cases as competitors, some cases as clients and partners, and always trying to be a team player in this developing world. So.
DeFi, Central, where do you sit in this continuum? Tell us.
Yeah, I think DeFi and or DeFi is a really like difficult topic in this this discussion because we are from GrizzlyFi. For now, we don't have to deal with all these things because we can use MetaMask. People can pay in without KYC, without AML regulations. So I think it will change in the future, and I see we have to adapt to it. So, yeah.
Go ahead, Sophie.
Yes, for me, I feel like, as we were discussing before, that end users, they won't care if like it's DeFi or CeFi. All they care about is like, is my money protected? Is innovation being fostered? And it's more about like having, like you were saying, like permission pool on DeFi where you can enter like in a KYC mode, the ML mode, and that's the future for me. Having those permission pool. Huh?
Yeah, and I think that's a very important point you bring, Sophie, because at an institutional level, what they care about is identity, right? They need identity or knowledge, and the knowledge can come in two ways. It can come in the shape of a human being who's behind it. It can come in the face of a trade, who traded and why, and it can face in the area of security. How do you protect it? Because ultimately people want a protected environment. They don't want a free-for-all environment. So when we talk about DeFi in many cases where the governance is distributed, the world is distributed, it feels like you're in this amazing utopia. Nobody controls anything. I can kind of run free. Freedom, trust, right? And in technological terms, it makes sense completely because technology is all about maths, right? But in a human sense, sometimes people feel a bit scared, right? Who controls it? Why? You know, banking has a value. It has trust. It has some sort of a go-to place. In DeFi, there's nothing. So can you help me understand that? How are you going to bridge that communication to explain to people that you are DeFi, but you also have those protections around you?
Does banking have trust? Yes.
Yeah.
In blockchain, we trust the code. I mean, when you're talking about digital identity, that's a very interesting topic. I mean, absolutely. In comparison to what Gregory was saying, I think we will have to do KYC, ML, of course, in the future. We are DeFi platform, but when we're talking about digital identity, we just want to make sure that the wallet that we interact with have been cleared by a third-party trusted institution. We don't need to know the identity of the wallet that we are actually trading with. We just want to make sure that the history of that wallet is clean. And when you were saying that users don't really care whether it's CeFi or DeFi and they want to know that the money are safe, that is partially true. But let's remember that when we're dealing with CeFi institutions, we have single point of failures, which are decentralized entities. When we are decentralized, we remove the element of the single point of failure. I think DeFi is I mean, I'm not saying anything particularly smart, but it's very early. So we are at the very beginning. As we grow and we become more institutional and we learn how to deal with institutions. And I'm saying we learn how to deal with institutions because we are waiting for regulations. We are waiting for the regulators to tell us how we should interact with institutions. So as the space mature and as we, DAOs and DeFi plays mature, then we're going to learn how to play to interact more with institutions. But we need to have the framework and that understanding. Digital identity is definitely a passage. But I do strongly believe that DeFi has a stronger and longer future than CeFi. I mean, it will probably be a hybrid in the future. CeFi will become more DeFi. We will become more regulated and enable and compliant. So it's probably going to be a hybrid model.
Got it. Hex Trust, you're compliant.
Yes.
You're regulated.
Of course.
People come after you all day long and say,
course,
you're regulated. Why are you
We're
regulated?
compliant and regulated. No, I was actually thinking about the example of DeFi, and I was connecting it in my mind to something we're building with our lead investor, Animoca. It's a non-custodial wallet, hybrid, simply because it's connected to the gamified world of Animoca. So what we're doing is providing custody of private keys while providing access to the gamified ecosystem of Animoca with wallets such as MetaMask. The whole point of DeFi is that They want user to have accessibility, immediate accessibility and easy. And that's what we're planning to do. We're going to use the existing technology with a non-custodial wallet while keeping private keys stored in a custodial solution. Obviously, the regulator cannot accept user losing money because they lose private key. That's not how it works. So we're trying to find a solution for this.
Got it. And on this side, Philip, Fireblocks, you're well known, institutional grade. A lot of people are using you. Why?
I think, first of all, it's great to see some customers of Fireblocks who've been using our technology here. That's always great. And I think what we're trying to do as an institutional grade technology provider is solve a bit of a limitation in the market today where there is a lack of institutional grade components within the technology stack to allow custodians to come into the market. So what we're trying to do is be able to provide technology that breeds confidence to allow institutions that have been trusted for a very long time to be custodians of traditional securities and fiat to come into the digital asset space and avoid that uncertainty of hack and loss and theft, which obviously on the retail side is what individual investors are looking for as well. So I think we have a very important part to play, and I think it's going to be the intersection of technology, security, regulation, and also interoperability, where we're going to see the biggest opportunity for growth in adoption of digital assets among institutions.
And Ellie, as a banker, what do you do?
Yeah, we were actually joking with a bunch of people here that when they heard that I'm from a bank, they said nobody wants to hear what we have to say, but someone has to. So to us as bankers, compliance is about protection, and we protect both sides, the customer, as well as our clients and our investors. And as that protective layer, we solve the difficulties that some of you have mentioned by involving compliance at a very senior level very, very early on. These are people that are deep in the industry, that know what they're talking about. So even when it's DeFi, even when it's a crypto platform which may have some questions asked, we do work closely to make sure that it's regulated properly, that all sides involved are protected, and we as a bank can offer the services that a bank should offer.
Got it. Regulations, good for you or bad for you?
Well, I think regulations are necessary. Like my colleagues mentioned, there needs to be guidance from the regulator from the very top. I think only then we'll see institutionalization, especially of DeFi. But I think what people tend to forget is the regulations that are currently in place. And especially when it comes to regulations from a banking side, I'm sure maybe some or most are probably not familiar with that, but the Basel Committee for Banking Supervision, they have issued guidance on what banks are allowed to do and what banks are not allowed to do, and how cryptocurrencies are calculated from an exposure point of view. So, and this is really critical when one looks at it, because right now, the current stage where we are, although there is institutions coming into the market and many more institutions want to enter the market, it's almost impossible for them. So right now, wealth managers are entering, asset managers are entering, market makers like us and GSR are entering, but the big banks, they're mostly excluded for a simple reason, and that is regulation from Basel III. So Basel III right now says, if you hold Bitcoin or Ethereum or any kind of cryptocurrency on your balance sheet, there is an exposure calculation of 1,250%. So every bank has to follow, because of the subprime mortgage crisis and the financial crisis in 2008, they're regulating banks obviously heavily that this doesn't happen again. That's the good side, right? Because we don't want another financial crisis. However, in this term, it's probably a bit over-regulated, because when you compare the risk-weighted asset calculations for crypto at 1,250% versus, I don't know, venture capital at 150%, currencies at 10% to 0. So that means any bank that holds a venture capital fund asset which is completely illiquid. There's a calculation of 150% into their own capital tier going in, but crypto, it's 1,250%. It doesn't allow a bank to hold cryptocurrency almost because of that. So I think what is absolutely critical is that, and banks are complaining massively because they want to offer lending and borrowing solutions to the clients, but as long as this is not tackled, and all the banks actually now working together to talk to the regulators and maybe focus on a different approach, like what the ESMA proposes, like a value at risk approach or commitment approach on that end. Until that happens, institutionalization will not advance at a pace where it actually should or could.
Yeah, understood.
Can I?
Yes,
You're absolutely right. You are correct.
Thought, and then we'll come back to you.
Yeah, you're absolutely correct. I fully agree with you. But there is a difference between a lender, so a bank that lends, and a transactional bank. So correct in terms of a lender, but when it's a transactional bank, it's all about transaction monitoring. And that, again, goes to compliance, protection, using the right tools to make sure that things are in place. We as a bank have launched a DeFi separately. So we developed a fusion of DeFi and CeFi. So we have a separate DeFi unit called EqiFi, which allows us to lend, but it's a separate licensed entity.
Yeah.
Okay. Let me try to pick up a few of the points. I think generally when we talk about regulation, I would say it's something good. Generally, I mean, it's not going to be perfect. It's not going to be as bad as we think. But when we think about the market really hates uncertainty. So if we have uncertainty with respect to regulation, a lot of hacks gets created, a lot of fuck ups going to happen, and there's going to be bad reaction from the regulator. The other point, I mean, I'm Swiss. In Switzerland, we have 2 crypto banks. So I think it's actually possible for banks to offer crypto offering. I think the main point there is how it's going to be structured. So it's more a function of your business model, if it's on balance sheet or off balance sheet, and then different kind of capital charges going to get applied. With respect to DeFi, I find DeFi just highly convenient. And I also believe if it's going to be CeFi or DeFi, at the end of the day, the adoption will be there if we just have a nice interface and we're just going to drag and drop around. And it really doesn't matter. And then it's going to be some people on the nerdy spectrum. They're going to do most of the stuff themselves. They're going to be some more convenient people, which are the majority. They're going to outsource it to someone else. Now, when we think about infrastructure, I mean, when we just look at DeFi, I think the biggest problem there was already mentioned is the lack of identity. And I think when we think about who owns our identity, as bad as it sounds, it's the government. So as long as the government is not taking a step to actually allow you to have an identity database online, this linkage between wallet and identity, I think, is always going to be very tricky.
Got it.
Yes, I wanted to go back on what Dominic was saying about basically regulation and traditional finance regulation. And I think the issue is the trust there. So in the same way that I would take UAE as an example, like 15 years ago, they didn't have a traditional finance hub or anything, and they started from scratch with the DIFC. And it took them many, many years before they were recognized by other regulators around the world. And now they are kind of seen as on par with the other regulator. And this is what is missing. And this is what Basel III or other more traditional regulation are afraid of crypto, is because they don't have, like, on the other side, a regulator that they trust enough to lower the barrier of entry. And this is really what we need. We need and this is, again, this is something that I believe UAE is doing, the government doing really good on this, either on the Abu Dhabi side with the DGM or in Dubai with VARA or DMCC. And when they get a strong enough or harmonized enough regulation between themselves and other countries, then we have a backbone of a system that traditional finance can recognize as trustworthy. And this is, I mean, to me, is essential. Yeah.
Gagri, you were going to say something.
I also wanted to mention a topic which I discussed a lot with Swiss banks because before founding GrizzlyFi, I worked for Moody's in Switzerland, and I was the key account manager for all the big banks and reinsurances in Switzerland. And this topic came always up also with DeFi. And back then I also was really interested in DeFi. And I think also for institutionals or banks, it's really hard to choose products or also cryptocurrencies or assets, digital assets, because now I work for in this space, in this DeFi space, and I see all these risks because at the end it's code, and code has always risk. And the problem is that when you choose, for example, a DeFi product, then in the background there can be exploits, there can be like hacks, or I mean also you have many DAOs and they can decide from one moment to the other that the currency or cryptocurrency will like go up or go down. So I mean it's much uncertainty, and also I think the point is that in institutions or in banks there are sitting people, analysts with a banking background, but they have to be more like techies or nerds who understands the code, who understands the risks, and so they can decide if this is a product which they can offer from the institutional side.
Ripple has done it well. So, Sophie, I think you've been around for a while and you've done it well. So, what
Thank
have
you
you
for that.
done that has helped the ecosystem?
So what have we done well? Huh? Thank you for that question. So as you were saying, like, so Ripple has been very focused from day one on bringing institutions onto the blockchain, onto crypto. So there's RippleNet, which is a network of banks and PSPs. Through bilateral agreement, they send each other like cross-border flows. Huh? So remittance flows, cross-border payments. And really the first question we have when we have institution coming is which jurisdiction? So that's going to be like what you were saying, like which regulator should we choose? And for us, we're very committed, and that's a very clear stance with the US. You all know that we have like the SEC case, and we're fighting hard on that. We're fighting hard because we want regulatory clarity. Huh? That's very good for the business, not only for Ripple, but for the crypto industry in general. Huh? So for us, fighting for that for that regulatory clarity is very key. Huh? And engaging with the institutions and telling them about jurisdictions that are very pro-business. Huh? And shout out to Dubai for doing that. Huh?
Got it. Who here is regulated? By show of hands. Who is regulated here? 1, 2, 3, 4, 5, 6, 7, 8. Oh, so all of you in some ways are regulated by somebody. So the two words that I heard among all of you is regulation to lay a pathway to somewhere, right? What you need is a regulation for a path. You don't want regulation to slow you down, right? That's number one. Number two, I heard is the concept of trust, right? Gathering trust and gaining trust, because centralized institutions have this concept of trust. Blockchain by its own defense is a trustless system, right? Because you don't care who's on the other side. You don't care about counterparties. The code takes it all. So here's the dilemma, right? And I'm going to open it up for this dilemma. You'll understand that as a banker quite a bit. To every regulation, you need to have a regulating party on the other end. And guess what? Some of you sitting here are way brighter than the guy who's sitting on the other side of the table. How do you convince that person? Or how do you work with them to ensure they understand code, they understand mathematics, they understand algorithms, they understand the ability for mathematics to be able to contain and manage all of these things, which traditionally used to be done by people, right? People did all the work that you guys do today, right? So I think you're in an environment where the regulator is catching up to hire the right people to be able to have that conversation. Because if you at Hextra sat across somebody who has no clue what you do, what are you going to talk about? Have a good coffee, that's about it, right? So what did you do when you sat across the regulator? What conversation was there? And was it a journey?
Yes. Well, it's a very good question. And I have to say, here in Dubai, the approach is completely different from other jurisdictions. If you look at digital assets, or is trying to expand existing law to fit digital assets. Here, we all know that a new regulator was created. So VARA, the regulator most of us is applying with, has a very good understanding of native blockchain concepts. So we're talking about lending, staking, farming. They do understand the concept of segregation when you do provide custody. I was thinking before, in normal banking, if you have an account, you look at the bank looks at it as a liability if you have a customer. If you have a segregated account as a custodian, the client owns that assets that you are segregating for the custodian, and you're safekeeping the keys. But it's a very big difference from an accounting perspective. So I have to say here the regulator is very forward-looking, and it's more understands better the concept that are connected to blockchain and crypto assets.
Anyone else? You want to comment, Sophie?
Yes. So for me, I've been engaged mostly with the Singapore regulators for our application for the PSA, so the license in Singapore from the MAS. Because I was for 12 years in Singapore, just relocated to Dubai. And to be honest, I was quite impressed by the level of sophistication. Singapore is very strong in terms of their private sector, like public sector also, to hire very strong talent. So I've been very impressed, to be honest, with Singapore. Yeah.
Great. I was talking to Arvind,
Yeah.
who tried to explain to me what you do or your products. And frankly, I'm in this business and I got a bit lost. So how do you communicate what you do in a way that is simple, elegant, and yet able to get across to regulators?
Yeah. I'm not sure if I'll do it elegantly, but generally speaking, I find them reasonably intelligent. So I always assume both our clients and our interlocutors are smart. So and they generally are. I mean, so I have a reasonable experience in traditional finance. I'm regulated in traditional finance for the last 20 years globally. So it's straightforward to describe what we do in terms of our own language. So the concept of segregation and rehypothecation, for example, as Filippo described, is a basic one, and it's key in what we do in certain respects. The concept of the moment you rehypothecate a portfolio, what you can do with it, again, it's a straightforward concept. The fact that you act in the context of the portfolio management investment activities, it is familiar in various regulatory frameworks, again, allows you to do various things that you don't need to be very prescriptive about. So I think it's reasonably straightforward, creating an analog with traditional finance and adopting certain principles that exist there for our own purposes.
Got it. And that's a very interesting point you bring, because I'll get to you, Ellie, in a second.
Yeah, for us as a bank, it's about partnerships with the authorities, with the regulators. In many ways, we preempt the regulations themselves to make sure that we protect our clients, our investors, the market itself. We are part of many working groups within the sphere, government working groups. We work closely with FATF to make sure that we're fully compliant. We assist in some ways to make sure that there's as much transparency, as much accountability as possible. And I think it's really what it's about, is working together. If we all work together, I know everybody said it a number of times, but that's all it is. It's working together to make sure that everybody is on the same page and everybody is protected.
Got it. Got it. So you use bank grade philosophies and processes to ensure that you apply them across your digital assets.
Right. For example, we have many customers that come to us that are not regulated, but they are in crypto. And even though they may be registered in a jurisdiction which does not require licensing, we would never onboard them because it wouldn't protect anybody, it wouldn't protect their own customers in many ways. So we make sure that we set the example as an industry player.
Got it.
I think generally as an industry, it's our duty to proactively talk to the educator and basically educate all the regulated, because at the end of the day, if we're not part of the discussion, we will get regulated and it's going to be less pleasant as we are involved in. But I also have to say, to a certain degree, especially the thing that's touching technology, blockchain, and financial services, I mean, if you do lending, if you do borrowing, if you take custody in, if you do it in form of a bank as a technology or a wallet or something else, it's not really that different if you're coming from a jurisdiction which is actually more principle based in their approach, like Switzerland, instead of rule based. And also when we bring up the idea of trust, I mean, currently we trust the regulator to understand the balance sheet of a financial institution. I mean, we can go back to UBS or Lehman Brothers. Also, with that kind of technology, it's not always working out. And then basically over time, I think we will see less accountants and less lawyer, but more technologists over there. But I think the same pattern you will also see when we look at KYC and AML things. I mean, we have now guys in an office and women that check if their boxes are done. I mean, somewhere in the future, we just have people running stat analysis over different kind of transaction, finding out weird patterns. And it's just like the job changes over time. Like at one point we were writing letters, then we were faxing, now we have email. I just think it's a normal evolution with a new kind of technology.
Before you go, because you're from Switzerland, and I do travel to Switzerland quite a bit, what did Zug and what did Switzerland do to create these two crypto banks? What was their thinking? Is this just the usual Swiss way of doing things, or is this some magic ingredient that we are missing?
No, I mean, I think we are neutral. So if you have an industry which has the potential to become huge, I mean, you have the Silicon Valley in the US, you have finance in New York, which has a disproportional amount of the whole value chain there, and there is some kind of huge industry that nobody wants. I think it's a nice place for us to invite them to Switzerland because we don't have natural resources. Then on top of it, I think the FINMA, the Swiss regulator, is a very good listener, at least compared to the SEC, which basically prefers to rule by enforcement and uses very, very draconian punishment. In Switzerland, you can have a dialogue, which basically gives entrepreneur the confidence to try something out. Then Zug itself has a long history of commodity trading or the other asset. So when we think about this token or this new crypto asset as some kind of new form of commodity, which was initially the mental framework used for, we open it up. Then at the same time, we had like smart entrepreneur and legal people setting up the Ethereum Foundation there. And then it just basically attracts more and more people. And I would say also in the last probably 12 months, we saw a bit more the crypto valley reviving because some other jurisdiction decided to be hostile toward this emerging industry, and so people will just move around. And in today's world, I mean, you can be involved in that kind of business with an internet connection, with a laptop, and your brain. So capital will just move around where it's treated the best.
Interesting. Go ahead.
Just a couple of words on the question you were asking earlier. How do we work with regulators and the general understanding? I welcome the experiment of Vara of creating a sandbox with some market leaders to understand how the space works. And as we all said, I mean, Vara has been very open-minded, granting some licenses for the first time or creating the option for the first time, I think, in the world for staking and farming. However, when I look at the group that was selected by the regulators to create this sandbox, I see not a lot of DeFi players, especially operating in the decentralized world. As DeFi, as a future DAO, we want to work with institutions. We want to interact more with institutions, and we want, again, we're asking for more clarity. So we would like to have the DeFi point of view and the DAO point of view be taken more in considerations when we are shaping regulations. When you were mentioning the inability of the regulators to look into books, right? And especially when it comes to crypto, Celsius have been a clear example of the failure of this ability of regulator to clearly understanding what was going on behind Celsius, and I mean, let alone what happened with Terra. So I think there needs to be an even more progressive outlook in the space, because DeFi is there. There's going to be more DeFi. There's going to be more DAOs in the future, and we need to really create a template also for us to be able to play at the institutional level.
Got it. Thank you. So, Philip, can you talk a little bit about Fireblocks and what have you guys done to continue to have a dialogue in Germany to build your momentum?
Absolutely. I think all of the participants in the digital asset industry have a stake in the discussion, and it's incredibly important that they interface on a regular basis with the regulators to shape something that is going to be workable for those participants to flourish. Now, as a technology provider, we are relatively agnostic to regulators and regulation. We believe that our role is to spend time with those regulators from an educational standpoint, and specifically around the aspect of custody, which is a very important kind of topic in the space today, to ensure that regulators understand that there are technologies that allow them to mitigate that single point of failure around management of the private key, which is a very different model from other regulators in terms of traditional securities and finance. Obviously, in the UAE, they've done it differently. They've built it from the ground up. But as you were mentioning, other regulators are trying to expand existing protocols to cover new technologies and a new industry, which there is a little bit of tension there. So our stakeholders in the business spend a lot of time on Capitol Hill. Equally in the UAE, our senior leadership has spent time with ADGM and with VARA, and will continue to do so to make sure that we are offering something that allows institutions like HEX and Komainu and BNY Mellon and State Street and STX in Switzerland to actually become those custodians that people can genuinely trust and don't get caught up in the bad news of the day with more money and assets going missing.
Yeah. So thank you about that, because it's that continuous dialogue is a very important part of the equation. But let me kind of talk to you a little bit about the fact that we all suffer from bad PR as well, right? So what does bad PR mean? Celsius went bankrupt, right? Lots of assets were locked in. I don't think people are going to get their money, or some people might get their money. One wonders how a company like that could assemble all this money and not keep it segregated, not keep it in pools where you had operational accounts and you had non-operational accounts, right? Which is basically client accounts. How could there have been no firewalls built into this process, right? Terms and conditions of Coinbase come out. Brian says, if my company goes under, good luck with your money. And then suddenly backtracks again with a big bicycle going backwards and saying, no, that's not what I meant. So look, these things don't add to our existence. They actually detract from our existence because it scares the hell out of people. It scares the hell out of the retailers. So the question is, what are we doing to ensure that when we scale up, that we have the first set of premise that the consumer should be in the front and center of everything, and everybody else around us should be providing services to that consumer rather than the other way around. Because if you're going to be the other way around, you might as well be a bank, a centralized bank with a single point of failure, right? What difference does it make? You know, an exchange really is a single point of failure anyway, right? So I just wanted you to kind of think about it, and if you have any thoughts, please go ahead. Any how do we get out of that zone of bad PR?
I think that's just part of the human nature. I think if there is something new and there's something that's intransparent and people can make fast money, it will always be attracting to grifter. I think when we put in Celsius in the mix, I think it's completely weird, because if you think about it, it has nothing to do with DeFi. It was essentially a bank without bank license. So just when you look at the activity, what they were doing, so you can say the regulators should have been a bit more aware. Now you can say it's technically complex, what it is. With the Celsius case, probably it could also be that the industry itself could have been a bit more like policing themselves, because I think there was some kind of awareness within the industry that not everything is 100% properly, but still, because the industry is like emerging and still very fragile, you don't want to throw stones at each other. So they rather probably kept quiet, and now we have a bigger mess.
Yeah, and the only reason I brought it up, and I do understand that it's not DeFi at all, is a consumer doesn't segregate. The consumer looks at life and looks at crypto and says, oh my God, what happened, right? So in some ways, we need to be able to play with that mix, right? We're never going to segregate and divorce ourselves from that mix. That's why I brought it up. So yeah, I get it.
Yeah, it's a fair point. I mean, my initial answer would have been, let's make better humans, because a lot of people that jumped into UST or in Celsius, they were so obviously greedy. I mean, let's take the UST with Anchor. I mean, we knew of people that go into it with a financial background. The same people, if I would have approached them with, I'm going to build fancy Kunstbank, that's my name. If you give me your dollars, I give you back 20% rates per year. They would just have looked at me and tell me like, what? And they would have walked away. But somehow in people's mind, if it has to do with blockchain technology or crypto, it's some wonder stuff that nothing else and the common human sense just disappears. But I don't know how to solve that.
You're a banker. How do you deal with your customers?
In what way?
Well, A, you got to gain trust. You're going to have to make sure that the window of return is within reasonable limits. You have to work with the regulator to ensure your capital adequacies are there. You have to have segregated accounts and a huge amount of communication. All of those things you need to do, right?
I think it just comes down to one thing, and that's team experience. I think, like Alan rightly hinted, it's about reputation and making sure that really you know what you're doing and you know who you're working with. I don't want to say anything about Celsius. I mean, most of us know the story. But again, it's all about the team. It's always about the team and the people behind it and what they've done before. And that reflects across the board, whether it's customer experience, adequacy ratios, transparency, relationship with the regulators, having responsibility, what responsibility you had in the past. It's things like that. And if that's, if you've got all your bases covered there, I think that's not an issue.
Great. Good. On that note, I'm going to start with you, and we're going to go this way to give some last thoughts. So anything that you want to talk about?
Yeah, just connected to what we just discussed. I think the industry had a chance of showing that it could self-regulate. It was not the case. It really did a bad job. So that's what's happening. But I think overall, I was reading an article yesterday. It's actually a scandalous topic for blockchain maximalists. It's the reversibility of Ethereum transactions. And that's very interesting. And I know that there may be conflicting views on this. But if you look at it from a regulator point of view, centralized time. But I'm curious to see your view about this, because this is something that affects security from a user perspective, but also, puts an end to decentralization as a concept. If you have any thoughts about this.
Go ahead.
Yeah, no, it's not. Well, when it comes to the Ethereum blockchain, I think that's particularly sensitive because it happens before, right? I mean, it's the original hack, but something very similar happened 2 days ago, right? With another very famous blockchain that is not as decentralized as apparently they claim to be, right? And a big hack, right? So that is a big topic of conversation. Would that give more comfort to institutions or investors to work with or to regulators? I'm not entirely sure this is the right way to go forwards, because if that is the way, then we should just scrap the blockchain as a concept at all, right? So let's just use a centralized database and or stay with banks, as you said, right? So I think blockchain has a reason to exist, and that's the reason why they've been so widely adopted, and it's been one of the most fastest growing technology of the last century. So no, I don't think that's a good idea, basically.
Well, just to go back about this kind of scandal on Celsius or 3 hours or others in the same bucket, essentially, this happened in traditional finance as well. Like there is those excess, but in traditional finance you have government stepping in. Like you see recently the a pension fund in UK without government intervention, that it's a collapse of the whole system. But we don't have that in crypto in general. We don't have like a god somewhere that is able to intervene, and we don't. And I think the actor of the system don't really want one. So how do we solve this? I think the less, I mean, there is, I mean, yeah, the less interoperation, or the less how do I say that? The less people are trying to do too many things. Like when you look at three arrows, they're like their ends in too many jar or things, and then there is too many people that are involved in the back of it. So once one guy is basically shutting down, there is a cascading effect that is taking all things. And this is a tendency that, because crypto started from scratch, for a new actor to say, okay, I'm a custodian today, and then suddenly looking at borrowing and lending and say, oh, that doesn't really exist. Let me do it as well. And then I introduce more risk in my core business, which is custody. And I should be about safety. Right now, if I'm lending and borrowing, then I introduce risk, maybe value, and that's probably why the tendency is there. In the same way, exchanges are essentially custodian right now, which will never happen in traditional finance. Why? Because custodian didn't exist at the beginning. There was, I mean, you could potentially be self-custody, but there was no other option. So because there was a void, someone filled out that void. And I think that when each of those like security block will be held by different actor, but that they don't have any risk in the other blocks, then when there is a failure, it only affects that person. And this is, I think, the best way to solve this without having a government behind us.
Yes, maybe my conclusion and thoughts on this topic, regulation on digital assets, and also especially DeFi. Even though I'm building in DeFi and I'm a maximalist, I think regulations are very important, because for me it's like without regulations or good regulations, it's like a football game without a referee. And so I think it should be like going more in this direction. And yeah, I'm looking forward, and I think we are from DeFi, we are ready to also like helping also to move forward the adoption, because with the institutionals, the adoption comes closer, and also it's more safer for all the customers and clients. So I'm looking forward.
I'm looking forward to progressive and open-minded regulations from people that understand the space, and not just that they want to force their hand replicating the same mistake that they did in the centralized ecosystem in CeFi to DeFi. And I'm looking forward for a framework that would allow DeFi to grow, to become stronger, for DAOs to grow and become stronger, to create communities of participants that can actually create value together rather than opposed to each other. So I really hope that the future regulations will take in consideration all of these aspects, because that's a lot of money, there's a lot of talents, there's a lot of ideas that have been putting into this space, and it would be just a bad mistake to frame all of this into the old with the old mentality.
Yeah. The crypto space is probably the most promising technology we have. It has the most talent. Most of the new talents from university are jumping in that space, and it attracts a lot of capital. So I'm very confident over the medium term or long term, it will work itself out on the regulatory side. And I'm even less worried actually about all the technical details that we have been discussing, because at the end of the day, that's just going to be rounding error, because someone will come up with something that's very convenient and the backend will take care of itself. I just think something we all here can take away or keep in back of our head when we want to increase adoption, is basically we need to increase the education. So every of you that discussed with someone else and see something fishy, point it out, even if it's the same industry. And then the same thing with regulators. They're also humans. The more we talk to them, the more they get various input from different people. They will get it. They won't get it perfect, but they're not completely going to tank it. And the less uncertainty, the better for the space, because we're just so early.
Yeah, as many of us said, like definitely, like what happened as a conclusion, like what happened the past few months was a necessary cleanse that highlights even more the need for regulation. We've talked about that. For me, like once we've solved for that regulatory clarity, I really want to focus on like what's there for us. As you said, there's a lot of support. Like we see strong talents coming into crypto. We see a lot of VC money. So very bullish for the industry. And I want to solve for real problems, for real use cases, like Ripple has been doing with cross-border payment. And coming from TradFi, like being from structuring at Deutsche Bank and FX services sales in Bank of New York, I'm very passionate about tokenization and seeing what it's going to bring to us. Are we going to see all those markets like commodity, equity, everything, like using digital asset rails through tokenization? So for me, that's what I see for the future. And definitely on DeFi, CeFi, we talked about that also, like seeing more merge of those. Yeah.
So I certainly echo the sentiment that robust regulation breeds confidence. I also think that there needs to be an increase in incentives and a lower of barriers to entry, both on the institutional side and on the retail side. Traditional financial players coming to the market, there's a very significant upfront cost in onboarding blockchain-based technologies. Meanwhile, there's not actually that many assets that they can trade and monetize today. So I think as that builds out, that will create more incentives. And I think on the retail side, for your everyday investor, to make it more accessible. So seeing things like crypto-based ETFs makes it more transparent for those users and easier to digest. And also use cases that are more practical and familiar to people on an everyday scale. And I think payments is a big area where we're going to see a lot of growth as well.
I think my takeaway, especially when it comes to regulation and everything that we have heard as well today, I'm very bullish. I'm very positive on the development and the development that is going to come. Not only because the regulator is starting to catch up and is starting to very much collaborate with innovators together, but we have in this ecosystem that we're all building together, we have one huge advantage, and that is Alain mentioned before, Lehman Brothers and other crises where trust was needed. We essentially build an ecosystem which can be completely trustless, right? That's how blockchain itself is designed, and all this transparency that comes with this actually makes a lot of things much easier. If you think about all the derivatives out there, and the valuation of derivatives in the world is more than the global wealth combined, it's physically and literally impossible in crypto with the way we're advancing that the same errors, in my opinion, are going to happen there, mainly because it's transparent. A custodian will have to be able to be in a position to instantly show all the assets that he's holding because it's on the blockchain. Or at least it has to be. That's where we are moving towards completely. And I'm obviously not talking about centralized institutions like Celsius or BlockFi, but the really decentralized institutions, and they will all work with transparency ultimately. And that's going to make discussions with regulators a lot easier.
15 seconds each, because I'm being...
No, I want to thank all of you, TDeFi and you, Feroz, and Crypto Oasis for arranging this. Regulation is fine, but we are ready for business now. So we are fine with regulators. So anyone who wants to talk to me and about us, about what we do, will be around the next 3 days. So I sincerely welcome any opportunity to talk more. So thank you.
I'd say that ultimately, coming back to what everybody else has said, especially Alan, we'll get there. People will get more educated. People will begin to understand more about what we're doing. And I think ultimately, we'll get to a point where everything is going to be absolutely fine.
Great. So thank you very much for coming, and thank you, audience, and thank you, participants, for helping. We're going to synthesize all this, and we're going to do round 2 and round 3 and see where it goes. So thank you, everyone. Thank you.